You're listening to the MarketGems Podcast, presented by the Chesapeake Group.
Welcome to the MarketGems Podcast, presented by the Chesapeake Group. Our guest today is the Strategic Advisor for Wealth Minerals Limited, Mr. Tim McCutcheon. Wealth Minerals Limited trades on the OTCQB under the ticker symbol WMLLF. Wealth Minerals is a developer of premier Chilean lithium projects in support of the global energy transition. The company's flagship Atacama Lithium project spans 46,200 hectares in the Atacama Salar, a region which contains the world's highest grade and largest producing lithium brine deposits. The Cusca Lithium project spans 10,500 hectares and maintains an after-tax NPV 10% discount of $1.15 billion per a preliminary economic assessment announced in January 2024. As the energy transition takes hold, the company's goal is to advance its project to production and serve as a leading provider of responsibly sourced lithium to the North American industry. Mr. Tim McCutcheon, thanks so much for joining me on the MarketGems Podcast.
Thank you for having me.
You got it. So leaping right into it, the global energy transition has created a strong macroeconomic tailwinds for the lithium space, though pricing has pulled back significantly from recent highs. So can you speak a little bit as to how you look at the global lithium landscape, how you direct lithium extraction in Chile as you're pursuing, how that fits into the equation?
Yeah. I think that there's a bit of disconnect in what is actually happening in the world, in the market, and sort of its perception. Lithium is a key part of this whole transition to the electrification of pretty much everything. And so gets a lot of headlines, right? But the reality is the lithium market is actually quite small. So what that means is that every once in a while, you'll have a surge of investor enthusiasm for whatever reason. And so effectively, you have a whole lot of money going into a very small pipe. And then sometimes that surge of enthusiasm goes away and you get the opposite effect. The end result of that is you get a lot of volatility. So what your first part of your question talking about, it went very highs and now it's gone down to some lows. That is just the outward manifestation of this volatility of money coming in and out of the sector that just simply isn't big enough to absorb it all. That is what you see when you put in, you go to your Bloomberg terminal or whatever, and you plunk in tickers for the sector. But the reality is, lithium as the key element of lithium ion batteries, it has become an incumbent technology. Way too many people, CEOs, multi-billion-dollar companies, you name it, have already put their chips on the table in terms of using this technology to transition from the internal combustion engine to, an EV car, boat, airplane, train, whatever it is you want to talk about, power packs for houses. So this incumbent technology, the train has left the station, which means that demand for lithium globally is not going anywhere. And as we replace internal combustion engines with lithium ion battery packs in everything, from your weed whacker, in your backyard, to battery packs that sustain factories for their power generation that basically smooths out the consumption of energy process. That's a pretty wide range of things. All of that's going to need lithium. So the lithium space in terms of consumption is doing nothing but go up in terms of demand. The actual lithium space in terms of things you can buy is getting bigger, but at a much slower pace than sort of the awareness of lithium as its key part in this transition. So you get that volatility. Now, what that means, though, for now, the current time, is after COVID kind of died out, people had a lot of money. They started investing. There was this wall of money that went into lithium that drove the price of sort of the main unit called lithium carbonate equivalent up to over $80,000 a ton. That came from a low of around $7,000 a ton. So just massive rally. That has now come off and tapered all the way down to $12,000 a ton. And now we're basically nudging up to 15. So this huge wave, we've seen it before, the fellows who've been in the industry for a while. But clearly, we're on the bottom swing going up as opposed to the top swing going down. So this interview with you is a particularly opportune time to sort of get your audience aware of sort of the dynamics of this. Where does wealth fit into all of that? There's lots of lithium all over the world. Lithium sort of is not that rare. Finding lithium in economically viable quantities is rather rare, and that's where we step in. And our projects in Chile have the potential to be what we call first-tier assets, meaning assets that single-handedly change supply-demand dynamics globally just because of their size. And we'll talk about that, I think, maybe a little bit later in the program. But to just give your audience a sense of sort of wealth stands, is that we have these large projects in Chile. Chile as a jurisdiction generally is the place where large multinationals who prefer stability, who prefer boring places. Chile is certainly a very boring place relative to its neighbor, Argentina, for example, in terms of just macro stability, in terms of there being predictability of the legal process and everything else. Where wealth, I think, has confused a lot of investors, and where the opportunity is that the Chilean government has only very recently got to the point of tackling the deregulation and the jurisdiction, the legal framework for growth for the lithium industry in the country. That's only happened about a year ago, and it's happening now. So people look at other sort of lithium players in terms of the countries. So, well, what about these guys? What about those guys? And you say, well, look, Chile is a very predictable place. It's a slow-moving train, but it moves in one direction, and it doesn't cause you any grief or headache as it moves. And the train has just left the station for Chile in terms of the lithium space being on the map, in terms of lawmakers and executives, such as the president and all of his ministries, them being on board to make all of this happen. So, again, now is also another theme sort of to why we're talking, is that now is a very opportune time for people to take a look at wealth minerals, because the overall macro situation is going well. And then sort of micro bottom up, talking about Chile as a jurisdiction operate, it's also going very well. As far as our projects and sort of what we're doing, the sustainable part is traditionally when you extract lithium from the type of deposits we have, and we'll discuss this a little later. Traditionally, when you do it, you basically pump out salty water out of the ground, you dump it into a big pond, and you let the sun evaporate away the water. And then you scoop up whatever salts are left over. Very cheap, very easy to do. The problem is that you're in the middle of the driest place on the planet, and you're actively trying to get rid of as much water as possible. So it doesn't really dovetail with the whole idea of sustainability and this whole push to being kinder to Mother Earth kind of thing. It's kind of the exact opposite of that. And wealth has always been at the forefront of finding a workaround around that traditional production methodology. And the way we do that is something called DLE, direct lithium extraction technology, which in effect allows you to pull up that salty water from under the ground, selectively take out the lithium, and then the rest of that water, that salty water, except the lithium, you put back into the ground. So the water doesn't just sort of get thrown away. It maintains the ecosystem. It maintains the integrity of the place where you're taking it out. And with the new technologies coming on board, you can actually do it at a quite cheap cost. So it really makes all of the shareholders happy because they're going to be making money, and it makes all of the other stakeholders happy because you're not sort of you're sticking to the original purpose of why lithium is in demand, which is moving away from dirtier technologies to cleaner, more sustainable technologies.
Yeah, thanks for laying out the context. It's important that that's shared with our audience, and that's what we're here for, really. Let's stay in Chile. The Yapacuta project spans 36,000 hectares in the Atacama Salar in Chile. That's home to the world's highest grade and largest producing lithium brine deposits, as I understand it. So what steps are needed to bring this to the global market? How could this project impact the global market dynamics for lithium?
Yeah. So right now, the Yapacuta project is what we own in the northern part of this dried salt lake bed, otherwise known as a salar. And the northern part we own. The southern part is owned. It's a long story, but it's owned by someone else who is producing there. They collectively produce 20% of global supply, and they are the lowest cost suppliers on the planet. Okay. Now, the material that they are extracting from that southern part, everything that we have suggests that we have the same type of material. So we have the potential to be just as big as the southern part. And we certainly have the land to do it. We have an enormous land package that is directly adjacent to these production things in the south. So that's a key sort of context thing to understand. Number two, the grade of the material that's being extracted in the south is exponentially higher than anything else on the planet. And to give you some numbers, more or less what they're producing in the south is 2,000 parts per million lithium, which means that in every liter of water, 2,000 parts of that liter are lithium. The next highest grade lithium operation, similar lithium in the world, is at 900. And the next one after that is 700. This thing is exponentially better. It's just a freak of Mother Nature, frankly. And we just happen to be lucky enough to have half of it in the north, basically. That's the main part of it. So because of its high grade, it's very low cost. Because it's high grade, it's political in a way, in which means that, for people who are starting to follow the story, they got to see that Wealth Minerals has put in a lot of time and effort into making sure that all of our ducks are in a row from a ESG point of view, making sure that everyone's comfortable with this, because it is going to generate an enormous amount of money, and anything that's worth a lot of money is political. If you know about Canada, you have the oil sands in Alberta, right? It becomes a political sort of football in a way. And so we spend a lot of time lobbying and reaching out to various ministers, to local indigenous groups, local municipalities, to make sure that everyone understands what we're trying to do. And the fruits of that work are just sort of coming out now. The good is now bearing fruit. And so we plan to be working in terms of drilling on our property later this year. That's sort of the general plan. And we're very excited about that. But we've already done quite a lot of work in terms of geophysics and everything else. So that project, we will call that a tier 1 project. The McCutcheon project is a tier 1 project, meaning it will single-handedly change global supply demand dynamics. It can be just as large as the South, and the South represents 20% of global supply. Give you an idea of the size. The two companies that produce lithium in the southern part, where most of their profit comes from, they have a collective market cap of over $30 billion. It's SQM and Albemarle. They both trade on the NYSE. So again, just gives you an idea of when you buy wealth equity, when you buy stock and wealth, you're basically buying a call option on that, being your exit, your expiry, your strike price, if you will, of what you're buying. So that's the main sort of crown jewel. And then the other project we have is called Cusca, and that's a little bit further to the north. Because it's a little bit off the beaten path, it doesn't receive the attention that Atacama does, the Atacama Solar has. And so, with a lot of these things, if you're sort of under the radar and no one cares, you actually have a much easier time of working. And that's exactly what's happened at Cusca. So we've already twice signed cooperation agreements with the local indigenous people. We've already been able to drill. We've already been able to do extensive geophysics, starting environmental baseline studies and everything else to have the project ready for that final stage, which is a bankable feasibility study. Basically meaning a big book that you hand to the bank and say, give us a loan to finance this, essentially like, the architectural plans for a house, so to speak. And we've already started the first step of that. And you mentioned at the beginning of the conversation with the PEA that was done, the preliminary economic assessment. The next phase, also happening later this year, will be to tighten up that PEA into a feasibility study, a pre-feasibility study. So statistically, what you're doing is your margin of error gets smaller and smaller as you collect more data to advance the project, right? So we've done the first step, basically a big broad brush. What can this thing look like? And it looks like it's pretty big, $1.1 billion NPV at a 10% discount. It would produce around 20,000 tons of this lithium carbonate equivalent a year. So it'd be on par with other projects that are similar to this, which have sold in the past for anywhere from $500 million to $1 billion. So we have a project similar to that. We have everything looks great. And so the next stage is getting a little more engineering, a little more geological to lower that statistical risk, right? It's just basically all development of geological projects is just knocking away risk factors one by one. And that's exactly what we're doing. That will also incorporate this DLE technology so that it'll be environmentally friendly. It will maintain the integrity of the geological unit that we're exploiting. And it's one of the main reasons why the local indigenous people are actually very happy that we're there. So anyway, I hope that kind of answered your question.
Yeah, and you did. You got to both the projects that I wanted to cover with you. The last thing I wanted to touch on today was the M&A environment in lithium,
right?
Given the strategic importance of this commodity and the environment we're in now.
It's crazy. Unfortunately, for folks in Europe and North America, we tend to be last to sort of figure things out and get mobilized on a lot of this stuff. The Chinese have gone nuts, basically buying up everything to get their hands on. And the basic philosophy there between these Chinese companies involved in lithium and then obviously making batteries on the back end is, buy the resource first and then kind of figure out what to do with it later. But there aren't a lot of these things around in the world, right? So, the idea is you buy 10, maybe 2 of them don't work, but at least 8 do, and that will basically comp for the entire, process of what you've done. So where we are today is that you have a lot of Chinese companies that have acquired a lot of these assets, particularly in Argentina over the past 5 years or so. You have projects that have been acquired in Africa as well, mostly by Chinese companies. You have a few North American companies that have sort of come in, start the finances to understand what's going on. And then you have the European consumers of lithium that basically say, oh my God, we have all these plans to, BMW and Mercedes, and we want to make all EV cars. That's great, but it's not going to happen if you don't have the lithium to make the lithium ion batteries. And they're just waking up. A little late, but better late than never, I guess. And so, if you study the Wealth Mineral story a little more, you're going to see that there's been quite a bit of activity in Europe because they've been the most active now in playing catch up, right? But the reality is, in terms of M&A targets out there, there's really not a lot left. Pretty much everything that's like a Wealth Minerals type company, most of them have been bought out in the past 5 to 8 years. And just if you look at the M&A activity in our presentation, you can see some of that. The M&A activity has just been at a rapid clip starting in 2021, 22. 23, for the first time, you started getting M&A activity in Chile, as we discussed earlier. Remember the regulatory environment kind of going in the right way, and that opened up the door for more activity in Chile. You had a $250 million buyout of an Australian company in Chile that happened in October. 3 weeks later, a French company bought out a private group for $100-something million, also in Chile. So for the first time in a long time, this M&A activity is picking up. We're sort of the last man standing. We've been talking with a lot of strategic partners, potential acquirers. That's part of my job. And for those who sort of follow, again, after they watch this, your audience watch it, you can look at sort of what's going on. But there's been quite a bit of activity. M&A activity is certainly looming in the background. We're going to continue plugging away to develop our assets because regardless of M&A activity, you still have to advance things and add value. But it is certainly a factor in the scramble for battery materials, and basically who's going to come out on top in terms of actually making that transition to electricity and sustainable energy usage.
We've covered a lot of ground today. Thank you so much for taking us on this journey in a short period of time. I want to give you a chance to leave our audience with any parting thoughts as we conclude today's interview.
Lithium is the incumbent material. And electric batteries have been around for a while. They've been around since the beginning of automobiles over 130 years ago. But gasoline, Henry Ford, and the Rockefellers kind of figured out the gasoline internal combustion engine was got to be the way we go. That's now changed. And now lithium, you have all of these car manufacturers that have all spent billions of dollars on gigafactories and making these lithium ion battery factories and cars going forward. And so lithium's not going anywhere. It is going to be consumed. It is going to be consumed in ever increasing quantities. And Wealth Minerals has assets that dovetail very nicely into the disconnect between expected consumption of lithium and the lack of supply to fulfill that demand. And so that's where the sweet spot is right now. And everything's sort of coming together in terms of macro, in terms of micro, in terms of Chile and the jurisdictional things coming together. So now is actually a really good time to look at the stock.
Our guest today has been the strategic advisor for Wealth Minerals Limited, Mr. Tim McCutcheon. Wealth Minerals Limited trades on the OTCQB under the ticker symbol WMLLF. For more information on the company, you can visit their website, wealthminerals.com, or follow on LinkedIn, Facebook, and Twitter. Tim, excellent to have you on today. Thank you for joining me, and I look forward to getting with you again for another check-in soon.
Thank you. Thank you. Yes.
Thank you for listening to the MarketGems Podcast, presented by the Chesapeake Group, who is solely responsible for this content. Chesapeake Group encourages you to do your due diligence and invest wisely.